as per usual. So welcome everyone to our community call 7. It's super exciting. This call is deliberately timed about a week before summer transferability. As you guys could see that on the governance platform on Tele, you can see that the proposal to enable transferability is already live. It's pending still, so it will open at around, I believe, 9 p.m. CET today. The focus of today is gonna be really about what's been again going on the forum. What are the moves? What is how is the readiness, right, of the summer transferability? How is the DAO aligned, and how is the execution going? As always, a quick reminder, this is a lazy summer DAO-led process. What we are discussing today is either already live in an RFC, or is moving towards an SIP, or is about aligning expectations ahead of the decisions and that the DAO will soon need to make. I believe we have a number of contributors that I have invited across liquidity, analytics, and governance, and I'll try to guide the flow, but I'll explicitly hand off where it makes sense. And if someone isn't here, yeah, let's see who else can chime in, or I'll try to walk through the context so the discussion doesn't stall. So in the first part, I would like to briefly go through the Hyperliquid update, the launch status, and the implications. I'm not sure if Jordan has joined in. I believe I can maybe just kick it off. So it seems like this is one of the most strategically important expansions we have been discussing in the last few months, and the RFC is really about adding a new network, which is the HyperEVM, but it's also about positioning Lazy Summer early in the ecosystem, where the yield surfaces are expanding quickly, the native primitives are genuinely differentiated, and demand can move fast once liquidity turns on. At a high level, the RFC is about deploying Lazy Summer Vaults on HyperEVM, starting with USDC and USDT, I believe, and maybe let me see. I believe Chris is live with us on the call. Could you maybe hop in and chime in on the Hyperliquid status, and how does it look with the deployment?
Yeah, sure thing. So yeah, hi everyone. So yeah, we're just in the process of deploying the Hyperliquid vaults now, and they will, once deployed, they'll be handed over to the DAO, DAO governance and so on, hopefully in the next couple of hours. And at that point, when handed over to the DAO, that will also hand over the risk management side to Block Analytica, who can then set the caps and increase the caps. So the expectation is that it's probably either later today or first thing tomorrow when they will actually go fully live. I believe we saw an update that the USDC vault has been deployed, all with 0 caps, so none of them can be used until they've been handed over and the risk manager has set the caps. But I believe the USDT vault is now just being deployed as well. So they will both be deployed very shortly. Again, nobody can use them until they've been set by the risk manager, and for that to happen, they'll be handed over to the DAO. They'll be going live just with a couple of arcs in each one. And as I put in the SIP the other day, we will also then add rewards. We'll put a proposal up to add summer rewards to those as well. Within the summer UI interface, the proposal is to show those reward amounts from the off, and the Merkle kind of call data will backdate from the moment the vaults launch. Basically, so the summer rewards will be on there immediately. They'll be claimable from like kind of Monday, Tuesday next week. But yeah, we're hoping to see at least, I guess, 5 to 10 million in the first kind of 20 to 30 days as they go live. Tech Square. Yes, yeah, they're both lower risk vaults, I believe, labeled lower risk vaults. From that point of view, I believe Jordan had put, or same queue as you had put those in the forum posts and so on. But yeah, there'll be a number of vaults, a number of arcs that go live and markets with them. I think including like Hyper, Felix, and a couple of others. I forget all the names now. But yeah, you'll be able to deposit hopefully later today, early tomorrow, depending on the risk manager update and the caps. But we'll put an announcement in the public Discord when that all goes live.
It's super exciting. Thank you so much for the catch up here. I would also add that it really doesn't feel like yet another farm, that we can always observe in the DeFi ecosystem. It really feels like it's becoming a full financial stack. I think even if initial caps would remain conservative, I think it could still be very interesting to explore the new yields on this HyperEVM network. Maybe one question that I've seen around is that, yeah, if we should be looking at this Hyperliquid more of a near-term yield opportunity, or rather a longer-term strategic bet for the DAO. And yeah, I don't know if Chris, you would mind answering that one. How are you looking at the HyperEVM integration now?
I think the HyperEVM is one that should be viewed as a longer term strategy. I don't think it's probably comparable to the likes of like Plasma and so on that saw a lot of hype, huge yields on day one. Hyper's obviously been around for like really quite a long time and stuff now. It's kind of like proven the test of time. It's got it's growing and growing kind of TVL activity and users and so on. So this one is one that's like kind of has the evidence of being a robust kind of organic ecosystem, and not just a like jump in for the high yields on day one and then kind of leave again. We've kind of seen the similar with Sonic a little bit as well, which we also kind of expected people diving in for the first kind of 6 months Sonic rewards and so on. But obviously with Hyperliquid and stuff as well, obviously gained a huge amount of traction. So yeah, the expectation there obviously is it's a longer term play that we'll hopefully see the TVL kind of growing gradually on there.
Cool. I see that DeFi Nicola has joined us from the Block Analytica team. Would you mind jumping in and maybe you can tell us a little bit of how you guys are perceiving the risk and how you approach this new vault/new arcs being added?
Yes, sure. Thanks. Hello, everyone. DeFi Nicola here from Block Analytica. So yeah, maybe just a bit of context. So we've already computed initial parameters for the USDC and USDT, the upcoming fleets on HyperEVM, and those are going to include Hyperland, which is an Aave fork. So it's a single lending pool. So it can basically serve both the USDC and USDT fleets on SUMRFi. And then we also are starting with Gauntlet, Morpho USDC Vault and the USDT Vault, which does not have any additional collaterals from the ones onboarded to the Hyperland. And yeah, we are going to post the initial parameters on the forum likely today, and this is gonna include each and every assessment for all the collaterals, for all the assets available as collateral on the Hyperland protocol. And this is all gonna be posted on forums soon. So yeah, if you have any specific questions, feel free to ask. I'll be happy to address them.
Awesome. I'm really looking forward to the new arcs being explored, and then potentially seeing what else could be added, and what seems like the next exciting opportunity on the HyperEVM. But super excited to see the first vault ready. Next up, I was thinking to talk briefly about the DAO-Managed Vaults, but at the same time, I see that Jordan, who has been somewhat of a lead on this proposal. I mean, together with Chris, I don't know if since we are a bit shorter on the time, I would maybe propose to move to summer preparation, what to expect and what matters, because then we are going to have quite an extensive discussions around the liquidity and timings, and I would like to allocate as much time as possible to that part. So if that sounds good with all of you guys, I would just maybe bring a short context for the SUMR token, because this is really where a lot of questions tend to cluster. So SUMR had a token generation event. This was done last year. And what's coming now is the token transferability targeted around January 21st, aligned with the Aerodrome ignition. Before the token transferability event, what the things that actually matters are the fact that the governance V2 is live and is being tested. We still, I believe, should make sure that more of a complex cross-chain proposals are fully functioning under the governance V2, and then the foundation can move the rights fully to the DAO to make sure that we don't lock ourselves out with some bugs there, but it should be all good. SUMR can be locked into the governance V2, which has been a great new update coming in December. So basically, SUMR blockers and stakers can earn and are earning 20% of the protocol revenue in USDC with some additional incentives in SUMR token. The liquidity strategy seems that is progressing well. It is more of a staged and not rushed, and vesting and unlocked data is public, and I think it's done in a very nice way where everybody on SUMR 5 page can explore how those lockers are performing. I think what matters after transferability is how liquidity behaves post-discovery, how governance participation evolves, and I guess whether the DAO executes what it's already approved. And January really is about execution and not reinvention. Chris, do you want to add anything on the SUMR preparation, or maybe what people should not overthink right now?
No, I think you've covered pretty much everything, and we've got Methodic here as well from Aerodrome as well, if he wants to kind of jump in and just say anything at all as well for that on Aerodrome. But yeah, we'll be hopefully adding the reward incentives to Aerodrome later today, so in the next kind of 5-6 hours and so on. Like that's the plan, or at least that's what we're hoping the foundation will do in the next kind of 5 to 6 hours and so on, and sign those transactions. But yeah, as Jency said, like the SUMR token will begin trading at midnight UTC on the kind of 21st into the 22nd. So midnight UTC on the 22nd of January. It is just, yeah, it's 7 days prior to the year anniversary of SUMR deploying on chain as well. So it feels like quite a special kind of moment there. So it would have been live almost 51 weeks, and we'll start trading, and obviously we'll have a full-blown price and so on by then, which I think we've all been looking forward to. It's obviously been a long journey since the kind of initial discussions back in June, kind of hoping to get going in November, which I think was obviously a blessing in the end of the market conditions and so on. But yeah, I think everyone's super excited about getting going in in just over a week, just under a week's time now. So yeah, look forward to it. And yeah, for those delegates, please go and vote on the SIP proposal.
Yeah, I just wanted to say a couple words. So firstly, thank you all for firstly wanting to launch this specific way via Aerodrome on base using Ignition, and you know there's I know you're also looking to deposit POL after like a 24-hour period, and that's really admirable as well, to ensure that there's as much organic price discovery as possible. And you know, on our side at Aerodrome, we've basically got everything ready. We've got like banners ready for our front end. So as soon as like the incentives are deposited, again, hopefully within like the next 24 or so hours, you know, that'll go up. We'll be putting up more comms, and we've also got like Twitter Spaces lined up as well early next week. And you know, as you guys know, we do have like a very wide distribution of partners and funds and so on across Base and outside of Base too. And for all projects launching via Ignition, we like to try and make sure we do what we can to ensure it's like a successful launch. And we'll be sharing across all these like channels and all these chats that we have with different partners. So yeah, if you guys have any questions over the next 6 days or so, yeah, just feel free to message me, jump into the Aerodrome Discord. There will be someone who will respond. And yeah, thank you guys once again. Really excited for this.
Thank you so much, Methodic, for jumping in. If you're gonna stick around on the call, yeah, maybe even later on, if anybody feels like asking some questions, we're gonna have a Q&A towards the end. I would say let's jump, since we already sort of kicked it off towards the liquidity management and exploring the design space. I feel like, you know, this what has been all sort of different proposals on the forum, and what I've observed there is that what the delegates and what the DAO is not asking, or what it's asking is not what is the single best liquidity strategy, right? Like I feel like what's been an ongoing topic is like what combination of strategies would make sense here, given the treasury size, given the operational overhead, long-term ownership, right? And all of these are super relevant questions and important to address. I think if I could like sort of sum it up right now, the DAO is exploring several non-exclusive paths here, and this is the Aerodrome Ignition, of course, has been already voted on, and the first half of the funds has been transferred to the foundation, has been voted on. Then the proposal that I personally brought up was the Arrakis Pro, and sort of using Arrakis as a stability layer, making use of their off-chain execution, and basically using that as a liquidity management layer, as a sort of together with the Aerodrome Ignition. Then we had Thomas, I believe, was proposing Arcadia Pro solution, which is more of an on-chain and DAO-controlled execution. I hope that Thomas has joined us as well on this call, so he can speak a bit about that. We have the V-Aero meta-governance proposal by Master Mojo and Brian, which is focused on the long-term emissions control. I believe there was also Origins yield forwarding via Super OETH proposal. So I think each of these, they solve a similar problem, but they have a different ways of how to achieve that. So maybe to begin with, I would like to invite Arrakis to briefly explain how Arrakis Pro fits into a post-transferability world of the SUMR token, maybe what trade-offs the DAO should be aware of if that proposal would formalize into a SUMR improvement proposal.
Yeah, hey, thank you very much for having us today here. I'm Casper from Arrakis, doing growth together with Daniel, our tech lead, and Alan is also in this call, our quant. And then our founder, Hilmar, he will probably join in a couple of minutes if he, yeah. And yeah, so to give you a short introduction to Arrakis and what we do. So we do automated liquidity management on decentralized exchanges. We're one of the largest on-chain market maker, have been in the space since 2021. and we follow a pure maker strategy. So we place like limit orders on dexes with concentrated liquidity ranges, and we ensure that there's zero price impact with those strategies, and want to keep sustainable liquidity. And our solution is fully self-custodial, so the DAO or the delegates would still own the vault that we deploy for them, because we transfer the ownership back to our clients. And yeah, all the transactions are then transparent on-chain. We're happy to answer any questions if there are any, especially technical or quantitative.
Thank you so much. Yeah, if anybody has any questions, please hit up. Yeah, Rafael, I see you raise your hand. Go ahead.
Like, I'm a big Arrakis fan since the days of the like I think 100x loop on between USDC and DAI, and I'm wondering, like, what would the interaction be between the Aerodrome ignition incentives and using Arrakis? Like, what's the best design there to should both work at the same time and would be synergistic, or is it good to do one and then the other? And so, like, this is a question that I had that I like just couldn't answer myself.
Yeah, so usually we try to launch both pools at the same time, just to also capture the volatility in the Arrakis vault. And we are able to have a bootstrapping strategy where we start off with a very skewed inventory and then kind of rebalance with limit orders that we set up towards a more balanced 50-50% ratio. So that's what we do with our bootstrapping strategy, and it works especially well during high volatility. So yeah, but I think as it is now with the DAO, it is thought to like the Arrakis vault would only launch 24 hours after transferability starts.
Okay, thank you.
Maybe to add a question here, are there any trade-offs that you see that would be important to highlight for the delegates to understand whether going with the Arrakis would be more beneficial, or how it would really work together with the Aerodrome ignition? Sort of like, I think the main point here of discussion was the fact that you guys would deploy the liquidity onto Uniswap, whereas the main avenue over the first hours would be on Aerodrome.
Yeah, so the question is about the timing of the Arrakis vault launch, right?
Yeah, sure. And how it would like sort of complement the fact that one is on Aerodrome, one is on Uniswap.
Yeah, definitely. I think it's very important, as I mentioned, with the high volatility in the beginning. So I think that's something that we can like capitalize on. But I think from past experiences, maybe something from that we have observed, you can.
In general, liquidity protocol or liquidity is a base layer for your token. So Ignition has shown to be very good at distributing the token to VRO holders. So you get that from day one. But you depend on the willingness of these VRO whales for holders to actually LP in your pool. There are incentives, of course, because by providing these incentives in SUMR token, the VRO holders vote to get them, and this actually puts IRO for the next epoch in the current world, in the current pool. So there are incentives to LP, but these incentives are not or might not be sustainable in time. So you, as a protocol, need to be sure that your token is tradable forever, in principle. And Aero ignition is good at maybe during the first epochs to distribute this value, but to keep your token tradable with low price impacts is kind of mandatory or necessary, that you still own part of that liquidity. So you can rely on external providers like these Aero holders that will help in your pool, but in principle, this is not sustainable enough in the long term. So that's our approach. And we are compatible with Aero ignition in the sense that we can even be in the same pool. But but in long term, you need to own part of that liquidity.
Yep, token burst.
Yep. Yes, hello. I just wanted a quick clarification because on the proposal, I've seen two amounts of SUMR being mentioned. At the beginning of the proposal, it's a $500,000 equivalent in SUMR token, but then in the body of the proposal, it's a $100,000 equivalent of SUMR token. In both cases, with the price at the time of launch, essentially. So which it is? It is a $100,000 or $500,000?
So I believe since the proposed vote was 80 to 20 SUMR to USD, it would be 100,000 of liquid assets, so USDC, and then SUMR. So like the SUMR tokens would have to be in at around 500,000 worth of SUMR.
Okay, yeah, there was a bit of a typo in the body of the proposal that got me confused. That makes sense with the rest of the proposal.
Yeah, thanks for pointing out. I'll have a look and try to adjust it. Yep, Brian, feel free. Go ahead.
Hey guys, just wanted to jump in. My biggest concern is pretty much the fact that we would be signing liquidity management over to Arrakis for an indefinite amount of time. So I'm just curious, like, if Arrakis would be interested in, so pretty much sort of allow, like, giving guidance so that we can transition management in-house either to the foundation or to a delegate or a working group or something like that, because in DAOs, namely DeFi DAOs, a lot of like treasury operations, namely like treasury management, has been shifting towards in-house teams, and just concerned about signing away indefinitely protocol on liquidity management to a service provider. And so kind of curious what provisions you guys have to help us sort of eventually manage our own POL.
So we help you with our liquidity management infrastructure. We help you to manage it, so to say, on your own. Of course, there's some type of service fee that we charge for our know-how that we bring in. And like we have a sophisticated team of quants which manage the vaults daily. They look at what's working, what's not working, and adapt to like specific market structures. So of course you could try to do it in-house, but at the end of the day, I think there's a big reason why protocols such as Morpho, Euler, and Wormhole, and many more decide to outsource that professional liquidity management to us.
Yeah, maybe just to add quickly to Casper's point, so you would always be in control of the funds, so you're free to do deposits and withdrawals to your vault anytime. So say in 2 months, you would not be happy with the Arrakis work, which we hope that won't be the case. But if so, then you would be free to withdraw anytime. So the vault is in your custody, and yeah, you're free to do that. And also, maybe quickly to introduce myself, I'm leading the quant side of business at Arrakis. And I can also maybe quickly clarify why Casper said that it is beneficial to start the Arrakis Vault together with Ignition. And that is because our bootstrapping strategy benefits from volatility, and we can just bootstrap your quote asset much quicker in volatile markets. So it's just an advantage if we start together with Ignition, but it's not mandatory, right? So we would recommend it, but it's for you to make the decision. I hope that answers some questions.
And just a heads up, I saw Chris mentioning someone trying to get in. So unfortunately, on the calendar, there's 2 different meeting links. So some people might be trying to get into the other one. I spent like 10 minutes trying to get into the other one. So just FYI.
Oh, all right. Let me check back on this. I think yeah. If there are any other questions, please feel free to hop in. I saw that Bryce has would like to jump in and maybe share his thoughts. So please come in and yeah, let's hear it. I think this is really great. We are having these discussions on the open.
Yeah, thanks, James. I'm sorry, I have to run shortly before 2, and I guess there will be a bit of reactions to what I want to say. So I wanted to have the time. So first, I'm really glad to see you guys going through the Aerodrome pass. Congrats again on making this decision. I think it's synergetic to the DAO. Now, let me be as clear as I can be. I would strongly advise against Arrakis' proposal that is absolutely anti-synergetic in all regards to what you're doing here. And now let me explicit it a little bit. You're going to be launching a pool on Aerodrome under a VIMM model, okay? Meanwhile, within 24 hours, there will be a CL pool on Uniswap v4. What's going to happen? Most of the fees are going to be collected at the Uniswap level, not Aerodrome. That means your second week on Aerodrome, you're dead, because there will be very little fee collected and therefore very little vote. Now, there is also a problem with this proposal. Most notably, there is a 50% performance fee, which is close to Racket, if you ask me. There is also ongoing management fee past the first 6 months. And finally, you need to understand something. If you start with 80% of SUMR token and 20% of USDT, and you rebalance that, let's explicit what it means. $400K worth at inception price of SUMR token are going to be dumped one way or another. So it will also be detrimental to the price performance of the SUMR token. I had a look at the Arcadia proposal. It seems a bit more balanced to me. But overall, my advice regarding both those proposals would be the same. You are launching with VIMM. It's a perfect liquidity structure for price discovery. You shouldn't be looking at CL in the early days of that token for the various reasons that I highlighted before. You want to give the room for this VIMM pool to grow. If you want to provide liquidity as a DAO, then you can just provide that VIMM pool. And thanks to the incentive you'll have on it, it's even a way for the DAO to build its Aero position, because I saw that the DAO wants to acquire 200,000 VAero token. That's a great idea. That's a good way to ensure that you have long-term capacity to support your liquidity. And synergetic with that idea would simply be that the DAO funds, let's say 200K of, 100K of SUMR, 100K of USDC, I think that's your pairing asset, right? And just supply that pool and stake the token. And now you're also farming VAero and you're ensuring a liquidity baseline. But I know it's a bit awkward situation with the Arrakis team here, and I appreciate you being present. But again, I have 4 to 5 years of liquidity management experience. I've helped about 20 to 30 projects launch successfully. I do this pro bono, but professionally at the collective, and I cannot defend this blend in any way. It is absolutely anti-synergetic at least 3 to 4 different levels.
Could I jump in here? Just really quick. By the way, hey guys, I'm Hilmar, founder, CEO of Arrakis here. Could you elaborate on what is anti-synergetic here? I didn't quite catch that.
Sure. So the pool is launching on Aerodrome under a VAMM, so a constant product pool, right? Within 24 hours of that, you want to launch a concentrated liquidity pool on Uniswap. So I don't have the number for the fees. I don't think they've been communicated, but I imagine the fees for the CL will be lower than the fees on the VAMM. So the likely result of that is a volume capture at the Uniswap pool, and that means very little fees collected at the Aerodrome level, which means by week 2, past the ignition launch, there will be very little incentives on Aerodrome to vote on the SUMR pool, and therefore this pool will die out. That's the first level of problem that I have. There is also the price action, where I think simply for a launch, having a VAMM pool well funded is preferable for the first couple of weeks to enable the price discovery to happen and let it happen without being too spiky and having problem of out of range. And another level of synergetic problem, let's say, is the fact that the rebalancing that will happen. So you guys are starting with 80% SUMR, 20% USDT, with a perspective of rebalancing. We like to use words like rebalancing, but let's be clear here. That means a sizable dumping one way or another of SUMR to achieve that rebalancing. So I see that Methodic is popping in the chat. The pool is here. I'm a bit surprised. I would have gone VAMM, but yeah, that changes a bit, but then that explains even less why would this liquidity lives on Uniswap then if there is a CL pool on Aerodrome. And still, sorry, the last level is also very important, is this performance fee, because it's 50% of the fees, and we're talking about the CL pool here, so the fees could be sizable if properly set up for this. So 50% seems seems wildly excessive. I think the Arcadia proposal sits at 10%, so that gives you an idea of, how excessive this fee structure can be.
Yeah, thanks for elaborating here. I think regarding the Uniswap Aerodrome split, maybe I'll let either the SUMR or the rest of the Arrakis team comment on this, because this is, for me, nothing to do with the quality of the liquidity that SUMR can expect. It's more about which DEX will actually capture the volume, right? So that's more like which DEX should be preferred kind of question. When you, just to address the point of the 80-20 ratio and then having a bit more SUMR tokens at launch in the market, we have been doing token launches for 5 years now on decentralized exchanges. And I think the most important thing that a project has to do, it has to acquire base asset liquidity and DAO controlled liquidity in order to actually long-term sustainably be able to have quote assets, i.e. USDC or ETH in the market in order to support the price and not get when I don't know, an unlock comes or something similar, a huge crash in price, right? And the only sustainable way to actually achieve this is to have the DAO itself acquire that quote asset over time and then be able to provide it in the market. This will always and necessarily, unfortunately, mean that you have to sell some of your own governance tokens in the market in order to acquire that, right? There's no other way. There's no free lunch in life, right? And we always, from our models, know that doing this at the very beginning makes sense, because at the very beginning you actually have the necessary volume and volatility needed in order to turn over some of your inventory into the market, into USDC or some quote assets. So the goal should be to always acquire these quote assets as soon as possible and then be able to support the price. And in this way, we actually seen that, let's say a week or so, if you have suddenly some selling pressure coming in the market, you can support it and the price doesn't just rip to the bottom. when it comes to the performance fee, like here again, the fees are, I think, based on the service quality that you receive. We have models here that these 50% is not like making us a ton of money. I know, I see the data. It's actually, I think, still not high enough for many of our customers. If you look at the markets and the actual volumes that are there, right? What Arrakis gives you is Arrakis gives you all the tools, all the secure smart contracts. We have over $100 million in TVL. Plus, we have a whole quant team that like helps you go through the markets, go through the vaults, adjust the strategies. So it's a service that you're getting at the same time. And usually what you have to do in traditional market making, you pay retainer fees. And these retainer fees are usually way more expensive than what you pay with the fees, right? And at least our model is aligned with the customer, because if we are able to actually outcompete mercenary LPs in the market by managing the liquidity actively, we can generate you more fees and we take a cut on these more fees, right? So I think that's a pretty aligned model, where we don't just charge a flat fee per month and even if nothing happens, right? Could Aerodrome work on could Arrakis work on Aerodrome? Yes, of course. Arrakis works on any DEX, any concentrated liquidity AMM, Uniswap v4, V3, V4, PackXSwap, Aerodrome, soon also Solana. So yeah, we support all of them. But yeah, I think just want to address this real quick. Sorry for jumping in, guys. Didn't want to take over this. And Token Price, of course, appreciate all the feedback that you gave. And yeah, always like some pushback, of course, as well.
Right. Thank you for jumping in. This is what those calls are for healthy discussion, so that all the participants can make their decision. So yeah, maybe just to recap, because I'll have to jump soon. My recommendation overall would be that you launch with a VAMM. By my experience, it's much better to stomach the volatility. To Hilmar's point about accumulating some of the pairing asset, having a VAMM pool also enables you to do this with limited adverse consequences on your price of the token. Because again, I don't think it's a healthy strategy to welcome your first buyer with about 400K of selling pressure hanging over the head. I don't think it sets a good stage for a token to thrive and launch well. But that's my analysis. You can look for other opinions, of course. And overall, I would say you governors of the SUMR DAO need to be aware of something, which is you're launching a token. So you are, in a sense, a bit of a prey for a lot of service providers who understand that this is a moment where there is a lot of hopes, ambition, and also money ready to be deployed by the DAOs. And they're willing to sell you services that might be very qualitative. Again, I'm not saying anything. I'm not a quant, so I will not challenge you on that at all. But that simply might be overkill. That would be my my perspective on this. You do not need CL at launch. You do not need some fancy advanced rebalancing and I don't know what. All you need is a constant product pool that will be seeing nice volume, that will grow in TVL, that would observe a good amount of volume and therefore fees on its first week on Aerodrome, so that it can sustain with the voting afterwards. And especially considering that you guys are building a long-term strategy on Aerodrome, as it seems, because you're considering acquiring a VAero token and so on. So I would really essentially advise at this stage to do it in-house, meaning again that if you want to supply some liquidity, instead of going with a provider, simply the DAO itself can do that, because you do not need to manage that liquidity like a quant in the first couple of weeks of the token. Again, you can just, either it's a VAMM pool and therefore you're just passively supplying, but even if you're using CL, you can totally have a very passive strategy at the DAO level, in the sense that, you know, using a very wide price concentration or even a full range on a CL pool, it's also possible. And those would be my recommendation to best support the SUMR liquidity in the launch phase, where you're going to have a lot of volatility and you want to have room for price discovery to happen and minimize the negative pressure on your token, because I imagine you all want a successful launch.
This is amazing. Thank you all, guys. Thank you for having this discussion. I think this is absolutely great insights here. I would love if you guys could stick around just a tiny bit, because we have Arcadia next to just hear their proposal as well, and I think they'll be beneficial for the discussion here. So yeah, if you guys from Arcadia are here, please take the stage and let's hear your proposal.
Yes, sure. Thank you for having us. So I think with Arcadia, the DAO would deploy an Arcadia account that's fully self-custodial. It's the account that holds the assets, and the DAO has to formally allow certain actions that can be done by Arcadia with said account. In practice here, it will be the rebalancer, and if the DAO wants a yield streamer allows you to claim your IRO, send it to a wallet different than the account, so it's immediately, let's say, for use. So I'm rushing here a bit so I can address some of Token Bryce's points. I think with Arcadia, what sets us apart here is that we have been very Superchain and base native. So while we are agnostic to the DEX, in practice we have mostly worked with Aerodrome, Slipstream, IRO-based pools. We launched ourselves there. We truly understand the VE model, and I think as well in our proposal already addressed a few of the points. I said that with Arcadia, we see, especially with the VE model, that it should be dynamic over time. So it's not just a single strategy that you deploy now. It should depend over the various stages. There as well with Ignition, I think you should really adapt your strategy to it. Token Bryce said that you could either use a VAMM pool or very broad concentrated liquidity. I kind of agree and kind of not agree. I think doing a very broad CL pool is not that beneficial, since what you will get then is your liquidity you provide is very spread out, while other LP providers can quote very tight liquidity and get most of the VE emissions the first week, which is probably like the biggest boost you have. So I strongly advise to use a VAMM instead of a CL pool with broad emissions, since your goal in the beginning will be to acquire as much IRO emissions as possible, since this is what you then later on use to keep boosting that pool and keeping those emissions going and your liquidity. That said, VAMMs of course have their downsides. Your liquidity is spread over a whole range. A lot of liquidity is not used. So what we normally advise is to start VAMM to launch, and then when price is converging, do a migration. We have done that in the past for a few protocols. Advantage if you do that through an Arcadia account is that you can do it atomically, meaning that in a single transaction, you can take part of the liquidity of the VMM and immediately deploy it on a concentrated pool where like once price is already converging after a few weeks, we can do this migration at any point in time. So while of course I think there are benefits to immediately use Arcadia accounts, as said, you can automatically claim and stream your rewards to any working treasuries apart from your main DAO hold account. You don't want to do that much transactions with an account holding a lot of assets. An advantage of Arcadia here as well is that your rewards you can automatically claim and send them to a second wallet, so that things like the safe hack that happens via front-end capture are less likely, since you do as little as possible transactions with your main treasury. The rewards can be streamed to a working treasury. So there are definitely advantages to start Arcadia from the beginning. But that said, we can step in at any time when the DAO feels it's ready for, let's say, the next liquidity phase, to go from a VMM to still a very broad conservative chunk of liquidity in a concentrated pool. And here we can work with both Slipstream as Uniswap. I think if you are incentivizing via Aerodrome, it does make sense to keep your own liquidity in Aerodrome so that you're not kind of working against each other, but that you can keep it synergetic. And then what we typically do over time is when the incentives, let's say, are working properly, you keep your own liquidity as the base layer, but you also want, of course, people coming in with liquidity. Then you can play with staking and unstaking part of your own protocol-owned liquidity, so that the incentives you give are best allocated to either build your own IRO stack in the beginning and later on to attract extra liquidity in the pool. Then it makes sense to actually unstake. But with these type of timelines, we of course help our clients as well. So while we are DEX native, I think a strong point of Arcadia is our experience with specifically IRO, the model. And I think there as well, we can provide you a lot of insights in what worked and did not work. Then on our strategies, as soon as you would go to a concentrated pool, I think there as well, we have a lot of experience, done over 30,000 rebalancings already. With Arcadia, we started with more the individual users, so they have more narrow positions where our tech is tested. Now we are focusing on protocol-owned liquidity. While the underlying tech is the same, these strategies are very different. You don't want to optimize for yield. It's all about capital preservation and offering deep liquidity around the price. I think that's in a nutshell.
Pretty clear. I just have 1 minute, so if I may, as closing thoughts, I'm broadly in alignment here. I would just maybe not so much agree with this idea of transitioning. You can totally do the two concomitantly, and I think it's actually a very good strategy. So to have some VMM pool as well as CL. By the way, look at Aero, the token, liquidity structure on Aerodrome. This is exactly that.
Yeah. When I said transitioning, it doesn't have to be 100%. Like we can do it in chunks of 20%, but basically you would take some liquidity out of the VMM to deploy it in a CL position. We can do that atomically. It doesn't have to be an all or nothing. So indeed, you can keep your base layer for the very like events like the 10th of October. Their VMM still shined, but that's fully customizable, parameterizable in which speed and how much you finally do migrate to a concentrated pool.
Super. Yeah, no, that makes sense. That would really be my thing. You know, I think people love to hate VMM, but also tend to forget that it is the goal of a constant product is to ensure that your token can be essentially traded at any price. And considering, you know, you're in a launch phase here, I think you all understand what I just said is actually very desirable for the current situation. We want SUMR to be able to be traded at all price, and we don't want to see some kind of how to say, like EP price action because you're reaching some bounds of the CL and so on. So yeah, I'm sorry I have to jump. I remain available Twitter, Telegram, whatsoever. And yeah, I hope that was conclusive. And yeah, no, with your context and already from what I've seen, if I had to pick between the two in case I wasn't clear, I would go with the Arcadia proposal. I find it more balanced, more grounded with the objective, and also again the fee structure is reflecting of a provider that wants to work in synergy more than looking maybe not to maximize its profit, but at least feeling a bit extractive, because again, a 50% fee I think should not be tolerated. This is not traditional finance, guys, and I hope we live to that standard. On those words, I wish you all the best. I will be following the SUMR launch, and maybe to finish on a good note, let me tell you that I am also a very large VAO holder, and you have my votes. So you know that your launch will at least be successful in that sense. And I'm sure that a lot of other Aerodrome whales will also pile on this. So I'll be following. And best of luck. See you around.
Thank you so much. Thank you so much, guys. Thank you for your presentation as well, Thomas. It's very much appreciated. I see there were some questions also in the chat. I don't know if Methodic wants to wants to jump in to put your thoughts out in the open as well.
Yeah, I mean, there's there's truth behind what everyone's sort of shared so far, but just in our opinion on Aerodrome, it's that we've only done concentrated liquidity pools so far, because what ends up happening is if you launch with a VAM pool on Aerodrome, which you can, with all the volatility and all the fees that we're expecting, it would be likely that a CL pool will get created on Aerodrome, or even on like Uniswap or competitor DEX. And with most traders these days familiar with using trading by aggregators, those CL pools might end up better price execution, and therefore will end up vamping a lot of fees away from the VAM pool. So yeah, you could deposit the POL into a wide range, or you could use one of the ALM providers that we're discussing right now for the CL pool.
Thank you so much. Anybody else has any thoughts you'd like to share on this topic, or otherwise we can go towards Mojo's proposal. Chris, as you raise your hand, go ahead.
Hey, yeah, just to Methodic, just to follow up on what you just said and the comments there and so on. Given the ignition rewards in week 1 are so substantial and so on, hopefully then gets a lot of votes, and just based on what Token Price was saying as well around goods, he thinks that if I understood correctly, he thinks the other whales would prefer to see the AMM pool on there. And given that we as a DAO are like pushing only Aerodrome and stuff for liquidity, do you see the big risk in week 1 in particular? Potentially a CL pool spinning up and getting much liquidity if there isn't the incentives there, and same on Uniswap. Like, do you think the fees could end up, like the potential fee because of the capital efficiency and so on, is better in that first week? Like, do you see that as a big risk? I'm just wondering, really.
I would say so, yes. Yeah.
Okay.
That's why we've pushed CL all the time. Because like, whilst you might be farming that Aero that will be going to the pool in the first week, if it doesn't end up facilitating a lot of the fees, and like a concentrated liquidity pool will do that instead, then the flywheel ends up stopping a lot shorter than it could, because you'd want most of the fees to go through the liquidity that is staked. And so if you're staked at the VAM pool, but all the fees are being generated on a different pool where most of the liquidity is unstaked, then then error won't flow. Not as much, right? Not as significantly less error will flow to that same VAM pool following week. Yeah.
Okay, understood. Awesome.
That makes sense. Yeah.
Cool. Thank you. Yeah. I see Casper's got a hand as well, so I'll move over.
Yep. Go ahead, Casper.
It's sad that Token Price left, because he might have a big conflict of interest on being a VR whale. Basically, if you launch Ignition on a VAM, all the liquidity providers have the same risk profile, and this includes people that can LP with the token. So what can happen is basically VRO holders vote, they get the SUMR token, then they have two options. They LP to get more IRO. That maybe it's not the case, because now they have to bring 50-50 inventory because it's a VAM pool. So what might actually happen is that basically they don't decide to do that, and they just dump all the SUMR tokens they have, which is very negative for the price of the token. On CLIMs, the dynamic is different, because they might be able to control the risk levels. So the setting is much more competitive for VR holders that decide, for example, they want to launch with a skewed inventory because the risk level is different. So for at least for the first epochs, you will see much deeper liquidity on this setting compared to VMM. And yeah, as a VRO holder, it's much more difficult to actually play the game of farming Aero. So yeah, I mean, his viewpoint might be also skewed in the sense that for him it's very easy to go and just get tokens on dump. I don't know if it is of any interest of him, but yeah, there are things that make CL much better for Ignition in terms of the token dynamics and incentives for VR holders.
Thomas, go ahead.
That was muted. Yeah, I think there's also combinations possible. Like you can set up both a V pool and a concentrated pool. I still think it's beneficial to start with one single pool with thickest liquidity, especially if it gets very volatile. Your mercenary liquidity providers, they very often quote very tight ranges. So when price moves a bit, like they're out of liquidity quite fast. So in that sense, I think most important is that you keep all your liquidity on the Aerodrome ecosystem if you have a V position yourself as a protocol. Since we're not here only talking about external V holders, I think the next point is that SUMR wants to be a VE holder themselves. Then to me, it only makes sense to deploy your protocol or liquidity within Aero pools. It can be both concentrated as the basic pools.
Thank you guys for the insight here. If anybody has any questions, please come forward. Otherwise, I would like to give it away to Master Mojo and Brian to walk us through their Aero strategy proposal.
Appreciate that. I'll run through just a quick summary of the proposal. Sorry for my voice here. I'm pretty sick this morning. But with the Aerodrome Meta Governance RFC here, initially I proposed 200K locked Aero, but after some discussion, we're going to move that down to 100K. And the idea is to buy it from the open market or potentially through Vexy and try to get it at a discount. A multi-sig team will manage it. We'll vote every epoch on the SUMR LP pools. And this will help us with accelerating the sustainable flywheel that Aerodrome recommends, which is ignite strong, farm, lock, and recycle. And then risk are also mitigated. We got some flexible exits. We could always resell our lock at a later date through Vexy, or there's also 40 acres with their self-repaying loans. To me, I've been a big Aerodrome fan since day one. I think this is a smart long-term play for deeper treasury-controlled SUMR liquidity on base. And that's my quick speech, and I just urge you guys to check out the forums for the rest of the RFC.
I appreciate the comments there, Master Mojo. Just to clarify, just put in the chat. I'm not sure if you saw. Is that 100K USD in Aero, or I know you talked.
Sorry, 100K locked Aero.
Okay.
So
and is that still
that's
enough
probably
for...
like, what is that? Like, let me do some math. 60K right now, USDC.
Yeah. That's why I just double checking it out. I mean, and is that enough for the whole flight school stuff? I know that was an important part of it. Of your
without doing math, I think for passive flight school, I think we needed like 150K locked Aero. Unless is he still in the chat here? Is Matt still here? Maybe
Yeah.
he's got an answer for us that he knows the passive flight school bonus. It might take me a
I
few
don't
minutes.
remember the number off the top of my head, sorry, but I can find that for you, no problem.
10-4. Appreciate that.
Cool. Yeah, I do wonder. It sounded like the flight school stuff was a pretty useful part of your proposal. Like providing like kind of like value back to the DAO as well beyond the initial liquidity stuff. Right?
Yeah, it's definitely a huge benefit because you get an extra bonus of Aero every 4 weeks.
Yeah. So yeah, it could be interesting to understand what that minimum is and seeing the proposal based on that minimum from my point of view, just from my point of view at least. But yeah, no, I appreciate dropping it.
Yeah, we'll get that for you.
Sounds good. Thank you so much for sharing the proposal with us. Anybody with any questions here regarding the V-Aero strategy? I have shared in the chat the RFC, which points to the forum. So please feel free, to leave any comments there, and we can then go forward and see which strategy makes the most sense. If Origin folks are here, would love to hear your proposal. I believe there were some thoughts around using super OETH against SUMR and seeing how that could also create a flywheel. Is anybody from the Origin protocol here with us? All right. If somebody pops up a bit later, you're more than welcome to chime in your thoughts. I would maybe just again highlight one thing, that there is around like $225, I believe, $1,000 in liquid treasury assets. So we definitely cannot do everything at full size immediately. At the same time, I think it's very important to figure out the right sequencing instead of some sort of a maximalism here. I saw Catherine has joined the call, and I believe you guys are from the Curia Lab, one of the delegates of the Lazy Summer DAO. And I would like to make the next segment about the delegate lobby. Surfacing the work that sometimes stays invisible to the community. So I think please feel free to jump in, share with us what you guys have been working on and what's your proposal here, and then also, of course, if any other delegates would like to share their thoughts, you are more than welcome to join in. Take it away, Catherine.
Thank you, Jensei. Before I start, I want to apologize for my voice. I haven't been feeling well. So hi everyone, I'm Kathy from Curia Lab, and joining with me is Varit. You might recognize us from Lazy Summer Delegate Dashboard, which focused on tracking participation, the what and how much of the delegate activity. However, we've been in the deep exploration phase lately, and we realized that while counting votes is easy, measuring impact is hard. Most DAOs today are stuck in a trap. They reward quantity, which creates noise, or they rely on committees, which can feel biased. We've been researching a middle ground, a way to measure quality through the eyes of the community. Well, it's a work in progress experiment, but so far we'd like to call it Forum Peer Recognition Score, or PRS. We aren't here to say that it's perfect, but we're here to show you the logic and to get your feedback, hopefully, to refine it. The gap we're trying to fill is incentivizing things that actually matter, like deep research, feedback, and constructive debate. It's built on a simple assumption. The most qualified judges of a contribution are the peers working alongside with you. We're building a social layer that aligns genuine influence, complementing objective metrics rather than replacing them. So basically, how do we calculate it? So it's a 3-step process. The first one is we're going to score the comment. So every comment gets a raw score based on likes. We don't just count the number of likes, but rather we weigh who's liking it. So I'm going to say the formula. It's like weight is equal to role multiplier multiplied to the base plus the square root of VP over the VP reference. So it sounds and looks technical, but I'll be giving you an analogy to understand it better. So think of it like judging a talent show. When someone performs, we don't just count the applause. We look at who's clapping. So if the general audience or the unverified accounts clap, it's mostly just background noise. But if the VIP judges, or in this case, the core team members or the delegates, clap, their opinion carries a bit more weight. And that's going to be our base role multiplier. And for example, the songwriter or the proposal author claps at you, then it's a huge bonus because they know the material best. However, like I said in the formula a while ago, the role multiplier is only part of the equation. We also have to take into consideration voting power. So think of voting power like a megaphone. People with high voting power get a megaphone to amplify their applause. But the megaphone has a volume limiter. We use the square root formula to lower the gap between the small and the big holders. So even if a whale who has $1 million clap, they can only turn up the volume so high so they can be louder than the average person, but they can't mathematically drown out the rest of the room. So let me give you a concrete example. If Master Mojo, which we know is a recognized delegate, likes a comment, his like carries significantly more weight, for example 1x, compared to that of a random unverified user who only carries the weight of 0.2x. But if a core team member likes it, then it counts as double. So for example, if Jensei likes it, then it counts as double. This filters out the noise and amplifies the signal from the trusted participants. Note that the numbers mentioned are not definite, and these are just examples. So in summary, not all likes are equal. Does that analogy make sense so far? Okay.
Oh yeah, it does sound super cool.
Mm-hmm. Okay, so the next step that we do is step 2, normalization. So the raw score is meaningless without context. Normalization is important because every thread is different. Some threads have active debates, and others are more focused on technical discussions. Going back to the analogy, getting a polite clap in an empty room is easy, but getting a standing ovation in a stadium full of legends is hard. We have multiple ways to normalize, but in this context, we use max scaling. Basically, we look at the discussion and set the highest scoring comment to a perfect 100. Everyone else's score is calculated relative to that top performer. So instead of an arbitrary number, your score answers the question, how good was my contribution compared to the very best comment in this specific thread? But take note that we only score threads with 5 and above comments to keep the data reliable. And for the last step, that would be aggregation. So this is where we get the final score for the cycle. We want to incentivize quality over quantity, but we still recognize all of the efforts that you contributed. So for this, we take your number 1 best performance and count it at 100%. Then we take your second best and count it at slightly lower rate at 90%, then 80, and so on. This then creates a diminishing rate of return. It means that we acknowledge your additional contribution across different proposal threads, that every bit helps, but you can't technically game the system by flooding the forum with hundreds of average comments. You're gonna have to deliver some absolute hits to get a high PRS. So to wrap it up, we believe that forum contribution shouldn't be a volume contest. And we believe that PRS is the infrastructure that helps improve the measurement of the forum activity and its value recognized by the community. It allows the DAO to confidently reward genuine contribution rather than just filling space. But this is still just an experiment and a work in progress. This requires the right calibration, and if SUMR community is keen on exploring this, we'd like to invite you to collaborate and give comments on the PRS document to help us refine this metric together. Okay, that's all. Thank you. Yes, Brian Adams has a question.
Yeah, thanks, Catherine. I really love what you guys are building. There was a point in time I was trying to build something similar, and I can just give you some feedback based on sort of the, roadblocks we experienced, namely the fact that contributions sort of span like way more than the forum. There's a few of us who are sort of discourse forum native, where the sort of current setup of Curia would be very valuable, but there are people who do make outstanding contributions, whether it's forum Discord or just developers who are sort of introverted and don't really say much, but provide an outsized impact. So I would just like to give you the feedback that the more data sources you can feed into this, the better. And I don't know if anyone else needs to present something, Jense. I sort of had something I wanted to ask.
I see Raphael having hand up. Maybe you want to jump in.
Yeah, I kind of thought about this a bit, and I think what is something that is often not considered enough is the kind of reflexivity these things create, right? And I think in some ways science is a perfect example. Over time, peer review, which is a very similar system, right, has led to actually making science much worse. Now you have to publish more. Everybody has to publish in certain journals. You basically have these kind of informal gatekeepers because the ones that have been liked the most have the most weight, and so on and so forth. And the same is true in the internet with Google search and PageRank. So it's very delicate. I kind of love the push of measuring value of contributions. I don't think I agree with the method I think it's not there yet. So I unfortunately don't have a solution of how you can quantitatively measure it. I think I think we had this discussion in Rootstock Collective where we are managing delegate compensation, and I thought a lot about it, and I've been thinking about it for years. And in the end, we keep it super, super simple. And the reason is not just because we're lazy, of course, that's also one explanation, but because it's also better. And that's very often the case, is that I think there's a tendency, especially in crypto, to try to over-engineer problems that actually benefit from simplicity. And I think this is one of these things. That being said, I want to call out that I think a certain kind of reputation system is amazing. How to manage that is a whole different ballgame, but having kind of badges and a clear pathway for community members to level up and participate and finally come to a place where they also get paid for their contributions is really great for a community. I've seen Bankless DAO do that as far back as 2021, 2020, and it was really good for them, because there was a clear pathway where you can come into the DAO, you can do small tasks, then bigger tasks, and finally get paid and actually contribute to the product. And that was amazing for them. So I think there's something there.
And just to echo Raphael's point, that type of thing is not necessarily great for valuing contributions, but it's a great recognition system, right? for the people who care about that, right? Would be nice, like if Jensei, the way he does like the monthly governance recaps, could, you know, shout out a contributor who's very active on the forum, you know, could use that metric to sort of shout out that contributor and maybe, like, you know, attach a reward to that. Yeah, but yeah, when it comes to valuing contributions, it gets a bit dicey, you know, as Raphael said. Yeah, it could be a competition or gatekeeping, but it's a great recognition system, and some type of people love that. Personally, I also enjoy it on certain type of platforms, like getting that recognition, like, you know, you ranked first, you know, you're in the top 3 contributors on the forum this month. Yeah, that type of thing.
Yeah, I think this is also, thank you so much, Catherine. Was a great insight into what you guys are up to and how are you thinking around the delegate recognition. And I think this really plays well into this, like, sort of next iteration of the delegate rewards that we should all be sort of looking at, and how we can make it work for the 2026. I think we had our first sort of iteration of that last year, and I'm so much looking forward to continue exploring this. I see Barrett, you raise your hand. Please go ahead.
Hi everyone again. Barrett here. Thanks again. I'm with Katie. I'm from the QLE team as well. Thanks again, Brian and Raphael and Jensei, for the feedback so far. Regarding that, currently we're still, as mentioned, right? So we're still exploring and think about it. What's gonna work? What's not gonna work? But at the end of the day, the reason why we're trying to experiment with this, because we see the current Liquid framework so far. It's very heavy based on very number of comments and stuff like that so far, which you know, it tends to go somewhat more spam. So we try to see a way to make it scalable, and also the middle ground to make it not too biased and not easily gameable. But yeah, that's the logic behind why we think this is something we should explore on. But yeah, thanks for the feedback so far. And
thank you so much for jumping in. Anybody else from the delegates that would like to jump in, either share their thoughts on the rewards going forward, or have some sort of a delegate statement to call for the community to delegate to you? Otherwise, I can go towards closing thoughts of this call. Has been an amazing one. And yes, Chris, I see your comment there. It was absolutely beautiful to see that huge bubble coming into the lazy sound protocol.
I'll just jump in on something non-delegate related, namely the reimbursement for the Arrakis USDC vault. You know, I was curious what the update on that is. Personally, I think, yeah, obviously, I would hate to be in that position. And it's a good thing that we are thinking about reimbursing affected users. But the flip side is, you know, obviously there's going to be sell pressure baked into the transferability event if that does go through. So yeah, I'm curious how we are sort of thinking about moving that forward.
Yeah, thank you for bringing this topic up. Even though I haven't put it into the agenda, I think it's very much still under the discussion, as it seems on the forum as well. I think the main point of not sort of encoding it into like a distribution was that we kind of have to wait for the price of the token to come up. And I believe right now, when I'm looking at the proposal, it seems like a majority of votes has been towards a retroactive full reimbursement, which is 100% in SUMR tokens, followed closely by the 84% retroactive proportional loss reimbursement. On the vesting structure, it seems to be going towards no vesting more, but from the discussions that were held underneath, also coming from a couple of users sharing their thoughts, it seems like somewhere in between, right, of no vesting to 6 months vesting would be somewhere around 3 months of a vest. So the next step for this proposal would have to be sort of solidifying more of a SIP proposal, and I don't know if it would be of an interest of a wider community and of the recognized delegates to actually, even though it would be non-executable proposal, to bring it on chain, so all the users and community can sort of sleep better that this is moving. Considering the fact that the follow-up on-chain proposal would have to be sort of later on, once the price, let's say the monthly average price of the first month SUMR token trading would be figured out. I think that way it would make sense to then go forward and actually set up the distribution of the token to the affected users. Yeah, if you guys have any thoughts of you guys still on the call, I would love to hear what you guys think about the Arbitrum alt USDC vote reimbursement. Chris, go ahead.
I only have a couple of thoughts, mainly just from input, really just from other projects and so on that were in a kind of similar position. And if you look at things like Euler and so on, they very much kind of rejected the kind of reimbursement stuff. There was a very similar proposal put up by the community at Euler, and there's some very good reasoning and stuff put in there in a way which I think is extremely valid. That maybe is overlooked a little bit. Like it's obviously never a good thing when with any of the losses and so on the vault and so on. But I do think it does have the potential to set a very negative precedent, like moving forward, and ultimately as well remove the risk at all away from any users and so on as well. Like there is obviously the products that are used and everything like that do contain risk. Obviously the vault didn't perform kind of as expected, not due to SUMR's reasoning, but due to the underlying protocol that was supported on Silo and so on at the time. Like everything within the SUMR vault worked correctly from that point of view, and because the value was reported on chain, I think I shared that quite heavily in the last updates and so on, and so on. But it was very similar with Maker back in kind of Black Thursday in 2020 as well. There was a large kind of discussion and topic around the reimbursement and so on, which was ultimately kind of rejected in the end from Maker governance as well, and kind of similar arguments really from the point of view of Euler's one as well, and you can find that on the Euler forum and stuff. But that's all I would say, is I think it potentially sets a negative precedence moving forward, and it effectively says doesn't matter, like you can ignore the risk in a way if we're not careful. But yeah, just my thoughts on that. But yeah, it's ultimately a DAO decision anyway. I will see what it gets to, I guess. But yeah.
Thank you so much for sharing your thoughts. Anybody else who would like to hop in on this topic? All right. If we feel ready to close the call, I must say that I am so happy about how this call went. It has been absolute blast to listening to so many of you sharing your thoughts. It's just would like to take a few extra minutes here to close it out properly. I feel like moments like this, really right before transferability, tend to attract a lot of noise, expectations, and projections. But I want to highlight that this call has just showed how ready we are and how we achieve alignment on these topics. It really feels like the lazy summer is not rushing anything. I feel like what's happening right now is really the result of months of the protocol, of the governance work, of the marketing work, there, most of which also happened quietly. Governance V2 going live and actually functioning as intended is, I think, a great achievement of all of us. SUMR locking, enabling conviction-based participation, rather than short-term signaling is another milestone right there. The transparent discussions around liquidity trade-offs, not some sort of a hand-wavy promises, are I think very, very important. Again, mainly coming closer to the transferability of the token, and I feel like none of this is really accidental. It's really what the DAO that's trying to last looks like, in my honest opinion. Transferability isn't a finish line. It's a visibility event. For the first time, the broader market will be able to form an opinion really on SUMR. And this will be in the way I'm thinking, based on how distributed locks are, how active governance really is, how disciplined the treasury is, and whether the discussions are made in the open. Those are things we control collectively. This is not something that a team can ship on our behalf. One thing I really want to emphasize here is that there is no single way, no single correct way sort of to participate from here. Some of you guys will lock long term, some will delegate actively, some will focus on liquidity, analytics, or research. Some will just observe for a while, and that's okay. I think the system is intentionally designed to reward alignment, and this is what we are going to be exploring going forward as well. It's not really about uniform behavior here. So if you are a delegate or thinking about becoming one, I think this is another great moment for you to realize that your mandate is not just to vote, but to explain your thinking, to challenge assumptions early, to help others navigate the complexities of DeFi and of the broader Ethereum ecosystem. If you are a SUMR holder, your lock and delegation choices are not passive; they are signals that really shape how the protocol evolves. So over the next few weeks, what matters most is not price discovery or short-term optics. What matters is whether governance remains predictable, whether liquidity decisions are staged and properly set up, whether contributors stay accountable to the DAO, and whether we keep using the forum as the primary decision surface as we have been up until this point. I think if we do that, everything else is secondary, and so therefore I would like to thank everyone who joined today, especially those who spoke up, asked hard questions, or shared beautifully structured context. Please keep the discussions going on the forum, particularly around liquidity sequencing and delegate positioning as well. Nothing meaningful ends with a call like this. It usually starts from here. So we'll follow up. I'll make sure to follow up with a written recap, and we'll also share the recording of this community call, and as well the next steps. So again, thanks everyone, and see you on the forum and on the Discord. I see Tech Squared raising your hand. Please go ahead.
Yeah, I just wanted to say thank you to you, Jensek, for running the community and for your recent activity along the TTE event. Big kudos to you. Thank you.
Thank you so much. Thank you, guys. Thank you, everyone. And see you on the next one next week. Don't forget to vote on the transferability vote happening later tonight. Have a nice rest of the day, guys.